Hello and welcome to Editor's Tech. I am with Niranjan Rajadhyaksha, Executive Editor of Mint. We are going to discuss the impact of US Federal Reserve's decision to hold on to its tapering of 85 billion a month bond buying program on Indian economy and finance. Niranjan, welcome to the show.
Thank you.
So what's your first take?
Well, it's very clear that this decision by the Fed, it was unexpected in the sense that most people were thinking that there would be some tapering starting off in September. So as we've seen today, all markets, not just in India but across the emerging markets universe, asset prices have gone up. So I think this basically gives some breathing space for Indian policymakers, because the current account deficit is the big elephant in the room, so to say, and whether there would be ample capital flows to fund that current account deficit. There were questions. That's why the rupee fell in June and July. So I think this, in a way, helps as a temporary sort of breathing space. But that said, I don't think the fundamental structural flaws in the economy get covered by some more liquidity from the US.
Yeah. That's about the economy. As far as finance is concerned, a very critical point is Reserve Bank of India is going to announce its mid-quarterly review, and this will be Raghuram Rajan's first policy. Probably this US taper, holding on the taper, will give Raghuram Rajan the handle to unwind or to begin the unwinding process of some of the measures that Reserve Bank of India announced in July to protect the rupee. What do you think? Am I correct in interpreting this?
I think you're quite. I would agree with you that this would be the sort of cue for him to begin unwinding those, whatever that Operation Twist, which they tried, of pushing up interest rates at the short end of the market. But what is your view on the more long-term issues of the repo and CRR reductions? Do you think there is enough scope for him to do any action on this tomorrow, or will he just sort of roll back some of those liquidity tightening measures and perhaps keep the bigger issues for the next time?
Yeah, that's the crux of the matter. I would imagine that he will start the rolling back of or reversing some of the measures, July measures, but not fully, because again the forex markets, what we see is an incomplete market, because Reserve Bank of India has taken away the demand of the oil marketing companies outside the market. It's about 1.75 billion a week. So that's quite, I think that total unwinding you cannot expect at this point of time. As far as the view on the long-term interest rates, which means the tinkering with the repo rate, or even further liquidity easing through CRR cut, if you are hinting at that, I think it's not the time, because wholesale inflation rose in August. The retail inflation continued to be high, and the industrial output number, the latest number, is not as bad as many would have thought. So overall, we think that I personally feel that time is not ripe for cutting rates and looking for growth in that sense, but unwinding, making the short-term rates little easy than what it was, is definitely possible. So that's all from Editor's Take. For more, log on to www.livemint.com. Thank you.